Good morning and thank you to all shareholders for attending Bitcoin Japan Corporation's 122nd General Meeting. I am Philip Lord, CEO, and today I would like to speak clearly and directly where the company stands and what we accomplished in 2025 and where we intend to take the business in 2026 and beyond. The central message is simple, and I'll begin with it on the next slide. The story of this meeting is simple. 2025 was about building the platform, governance, controls, structure, auditor capability, and the ability to deploy capital internationally. 2026 is about disciplined deployment. Our objective is not to raise capital. Our objective is to increase long-term intrinsic value per share. Before I go further, I want to acknowledge something directly. We have heard from many of you that our communication has not been frequent or clear enough, and that you want a strategy you can follow. The feedback is fair, and we have taken it to heart. Today is the beginning of more consistent conversation with you, and you will hear a firm commitment to that later today in this presentation. Before we talk about the future, it's worth acknowledging what had to be done in 2025. 3 things changed. First, our legacy Marussia Hotta business is now managed separately, with a focus on operational improvement and AI-enabled efficiency. We have begun applying AI within the business and brought in new leadership with turnaround expertise to drive that work. It is no longer a distraction from our strategy. Second, our AI platform is now deployable. Our Delaware, Cayman, and Dubai vehicles are operational, which means we can generally invest internationally, not just talk about it. Third, our Bitcoin treasury is now executable. The auditor, the controls, and the deployment gates are in place. That means we can approach Bitcoin not as a speculative trade, but as a controlled, board-governed treasury strategy. None of this is glamorous, but this is the unglamorous work that had to come first. This slide shows the foundation that we have built. We enhanced internal controls, including the JSOX framework. We established an international structure required for cross-border investments. We onboarded a new external auditor with capabilities relevant to digital assets, AI, and overseas operations. And we enhanced governance with stronger advisory, audit control, and tax structuring capabilities. They are foundational capabilities that the company previously lacked. Each one is a precondition for the 2026 initiatives we are now pursuing. Shareholders should understand that before capital can be deployed responsibly, the institution needs to be ready. That is what 2025 achieved. And we have begun to act. 2026, we deployed an initial 3.12 billion yen of capital into 2 completed investments, SpaceX and Figure AI. I want to be careful with the language here. 2 investments do not mean the entire strategy is already proven, but they do demonstrate something important. They demonstrate that Bitcoin Japan can access, structure, and execute investments in leading private market opportunities most investors cannot reach. That our cross-border platform actually works in practice, and that the framework is scalable. In other words, this is not a one-off. This is the beginning of a repeatable capital deployment engine. This is one of the most important slides in our presentation. Capital is our competitive advantage, but only if it is raised and deployed correctly. We intend to raise capital only when we can deploy it into clearly identified opportunities expected to create more long-term value than the dilution required to fund them. Let me repeat that, because it is fundamental. We will raise capital only when we believe the expected value creation exceeds the dilution required. We know shareholders are sensitive to dilution. So are we. Dilution without value creation destroys trust. But capital raised and deployed into high-quality opportunities at attractive expected returns can be accretive. That is the difference between destructive dilution and productive capital. Our framework rests on 4 pillars. First, capital discipline. We raise only for clearly identified value-accretive opportunities. Second, exclusive deal access for relationships that provide proprietary private market investments not available to most. Third, active deployment across AI infrastructure, operating businesses, and Bitcoin, where expected returns justify it. Fourth, governance. Every investment subject to rigorous board oversight. Our objective is not to raise capital. Our objective is to increase long-term intrinsic value per share. Capital raising is simply a tool to achieve that objective. This slide sets out our process. We begin by identifying a high conviction opportunity. Then we estimate the expected return, including risk-adjusted return and value creation potential. Then we select the most efficient capital source. That may mean common equity, warrants, convertible bonds, convertible preferred, a rights offering, or another structure. The point is not to use one instrument in every environment. The point is to choose the structure that best protects shareholder value while enabling the company to execute. Then we deploy capital with speed and discipline. And finally, the objective is to increase intrinsic value per share. Again, that is the KPI, not the transaction size, not capital raised, not assets accumulated. Intrinsic value per share. This is how we want shareholders to judge us. This slide shows the tools available to us, and I want to walk through it carefully because it speaks directly to the dilution question. Moving strike warrants give us controlled execution and flexible access to capital. Convertible bonds offer a lower coupon with delayed dilution. Convertible preferred provides structured capital without immediate common share dilution. Convertible bonds allow us to raise capital at a lower coupon rate. As holders convert the bonds into shares, the repayment obligation is eliminated, strengthening our balance sheet and improving our financial position. And a rights offering, when appropriate, provides participation and dilution protection for existing shareholders. These four are representative, not exhaustive. We also retain access to other structures, including recycling capital from existing holdings. The purpose of holding a full toolkit is flexibility. We don't want to be forced into the wrong instrument at the wrong time. We will always select the most efficient source of capital for the specific opportunity in front of us. There is also an important safeguard built in. The first three instruments were already approved by shareholders at the November AGM, each designed to control or delay dilution rather than maximize it. A rights offering would require us to come back to you for approval at an AGM before we could use it. In other words, the most dilutive tool is one that needs your vote. The test we apply is simple. Dilution is acceptable only when expected value creation exceeds it. We will remain opportunistic but disciplined, seek the most efficient capital, focus on value over dilution, stay long-term orientated, and measure every decision by long-term shareholder value, not transaction size. We will remain opportunistic but disciplined, seek the most efficient capital, focus on value over dilution, stay long-term, and measure every decision by long-term shareholder value, not transaction size. Now let me turn to the market context and where Bitcoin Japan is positioned. We believe the world is entering a new technology cycle built around AI, robotics, digital assets, and strategic infrastructure. But we do not intend to chase every opportunity. We intend to focus where three things align: capital efficiency, growth, and Japan's strategic edge. That is the filter for everything that follows. This slide shows how we think about the AI value chain. At the bottom are the raw inputs, critical minerals, energy, semiconductors, and compute. In the middle, cloud infrastructure and foundation models. At the top, physical AI, robotics, applied and agentic AI, and the payment rails that let intelligent agents transact. We believe the value and agency will increasingly concentrate towards the top of the stack, but the entire stack depends on the physical inputs at the bottom. Our approach is selective. In semiconductors and hyperscale data centers, we will generally be selective or indirect because the capital requirements are enormous and the competition is concentrated. In foundation models, we seek pre-IPO exposure where access and pricing are attractive. In physical AI and robotics, we see an opportunity to own or operate, especially where Japan's industrial base and labor shortage create natural demand. In applied and agentic AI, we see opportunities to invest and to build rails. And in critical minerals and energy, we see strategic upstream exposure. The key message is this: we are not trying to own every layer. We are concentrating where capital efficiency, growth, and Japan's edge align. Why Japan? Because Japan is positioned to bridge two great technology blocks. On one side, the US bloc, open innovation, frontier AI, deep capital markets. On the other, the China bloc, scale, manufacturing, leadership, and cost-efficient deployment. Japan sits in a rare position. It is a treaty ally of the United States while maintaining important commercial ties across Asia, including China. It has a stable, trusted regulatory environment and deep manufacturing expertise. And Bitcoin Japan, as a TSE listed company, can offer investors a regulated, transparent access point into this broader AI and digital asset opportunity. Let me be measured here. We are not claiming Japan replaces the United States or China. We are saying Japan can act as a trusted bridge between global AI ecosystems, and that is an advantage few others have. This slide shows the type of opportunity set we are focused on. I want to be clear about what is and isn't. The examples are illustrative. They do not imply holdings, commitments, or access unless specifically announced. The purpose is to show the breadth of the market we are studying. Frontier AI, humanoid robotics, defense and space AI, and applied AI. The two positions we have actually closed, SpaceX and Figure AI, are marked, and they show the early direction of travel. But we remain selective. Access alone is not enough. We must also see attractive risk-adjusted return potential before we commit capital. Now to the investment. I know many of you have been most excited about SpaceX. We have invested approximately 1.97 billion yen at an entry price of $122 per share, including upfront direct fees, with the latest reference price shown on the slide. The investment was made through a special purpose vehicle whose underlying asset is a fund that holds ownership in the target company. But I want to stress what mattered most to us at the time. The entry price was attractive, and we did not chase it. We raised capital, we waited, we remained disciplined. And when the opportunity emerged at the price we believed was attractive, we acted. That is the behavior we want shareholders to expect from us. Why SpaceX? Because AI does not live in software. It needs physical infrastructure, and SpaceX is one of the most important infrastructure platforms in the world. Satellite connectivity and global communication networks. Nearly 85% of all global launches. A near monopoly position in critical parts of space infrastructure at sovereign scale that entire nations now depend on. But it sits at the intersection of the forces that will define the coming decade. Artificial intelligence, defense and national security, as space becomes a strategic and military domain in its own right, and ultimately the long-term ambition of making human civilization multi-planetary. This is a high-quality entry point into that future, bought with strict valuation discipline. Our second investment is Figure AI, a leading humanoid robotics company. We invested approximately 1.15 billion yen. Its last funding round valued the company at around $39 billion, having raised roughly $1 billion. As with SpaceX, the entry was on attractive terms. We participated at a level we considered disciplined, and through the same kind of structure, a special purpose vehicle whose underlying asset is a fund holding ownership in the target company. Figure AI gives us exposure to a leading global platform advancing humanoid robotics, strengthening an alignment between our investment portfolio, our operating business, and our long-term AI adoption trends. This is not random capital deployment. It's part of a connected strategy. Looking forward, we have 4 private market deployment priorities. First, frontier AI infrastructure, especially pre-IPO exposure to model layer and compute link platforms. Second, physical AI and robotics, where Japan's labor shortage creates a natural deployment market. Third, autonomous defense AI, because national security is increasingly software defined. Fourth, applied and agentic AI, where consumer and enterprise adoption can create recurring revenue. These are the areas where we believe access, capital, and our strategic position can compound shareholder value. But the same discipline applies to all 4. We will not deploy capital simply because a theme is attractive. We will deploy capital when access, price, expected return, and governance align. Rare earths are a strategic input Japan cannot ignore. AI, robotics, electric vehicles, defense systems, and advanced manufacturing all depend on critical minerals. The picture is stark. A small number of suppliers dominate key parts of rare earth processing, including heavy rare earths. Japan remains import dependent. Supply deficits and price volatility have raised the strategic urgency, and policymakers, including at this year's G7, are increasingly focused on reducing single supplier dependence. For Bitcoin Japan, the point is not that we want to become a mining company in the traditional sense. The point is that rare earths sit at the bottom of the AI value chain, one of the scarce physical inputs that everything else depends on. We are therefore pursuing upstream exposure where scarcity, policy support and Japan's national interest align. And as always, the discipline holds. Commitment will be phased, subject to diligence, and no capital will be deployed until terms and risk-adjusted returns meet our standards. Now to Bitcoin, and I know this is the part where some of you are most cautious. Bitcoin is central to our name, but our strategy is not about simply accumulating coins at any price. So let me explain plainly how we think about it in global terms. We start with the macro environment. Over the past 15 years, global debt has continued to expand. Central bank balance sheets have grown and money supply has increased. The supply of fiat currency has no fixed limit. Bitcoin is different. It has a permanently fixed maximum supply of 21 million. For shareholders who are not digital asset specialists, the concept is simple. If the supply of money and debt keeps expanding, scarce assets matter. Bitcoin is one of the only globally liquid monetary assets with a permanently fixed supply. That is why we view Bitcoin as a long-term strategic treasury capital in an environment of persistent monetary expansion, provided it is managed carefully, responsibly, and with proper governance. So let me be precise about what our Bitcoin strategy is and what it is not. We will buy selectively, accumulating only when we believe the risk-adjusted opportunity is attractive. We will manage it prudently. We will seek yield only with board approval risk limits. And we will recycle the capital when superior value accretive AI or blockchain opportunities arise. We will seek yield only within board approved risk limits. And we will recycle that capital when superior value accretive AI or blockchain opportunities arise. The KPI is not Bitcoin owned. The KPI is intrinsic value per share. We are not trying to maximize the amount of Bitcoin on our balance sheet. We are maximizing shareholder value using Bitcoin as a strategic capital, one tool among several. Let me put it plainly, Bitcoin is not idle inventory, and it is not speculative trophy asset. It is part of our broader capital allocation framework. Looking beyond Bitcoin itself, we believe AI and programmable money will increasingly converge. Traditional payment rails were never designed for autonomous agents, machine-to-machine payments, or programmable settlement. AI agents will increasingly need to pay, settle, and transact on their own. And stablecoins and blockchain rails are built exactly for that. 24/7, global, programmable. Stablecoin transfer volume reached roughly $33 trillion in 2025, on par with Visa. This matters because AI is becoming more than a software market. It is becoming an economic coordination layer where AI and money meet. We want to be positioned. And we believe Bitcoin Japan is positioned for that convergence in 4 ways. First, we are TSE listed, regulated, transparent access to AI blockchain convergence. Second, our Bitcoin treasury gives us a foundation in the broader digital asset economy. Third, our AI investments give us a window into where agentic commerce may originate. And fourth, our RAS operating anchor places us in the physical value chain because humanoid robots may well be the earliest machine transactors. Let me be clear that this is our long-term vision. We are not saying all of this happens immediately, but the direction of the travel is clear. AI will become more autonomous, transactions more programmable, and listed companies that understand both will be well positioned. 4 pieces, 1 strategy. Here is how it all sequences, and I'll move quickly through the part you've already heard. Horizon 1, 2025 was foundation, delivered. Everything I described earlier, controls, structure, auditor, board is done. This matters because each horizon enables the next. Horizon 2, 2026 and 2027 is deployment. Active now with SpaceX and Figure AI closed, the private investment mandate live, and Bitcoin treasury activation underway. Horizon 3, 2028 and 2029 is integration, bringing our investment portfolio and operating businesses in AI and RAS together into a more mature platform. In other words, this is not just a timeline. Foundation-enabled deployment. Deployment builds the platform, and the platform is intended to mature over time. Let me be honest about what this is. The later horizons are indicative targets, not guarantees. Market conditions, portfolio performance, and execution all matter, but the direction is deliberate, and we are already on it. No strategy of this nature is without risk. which is why we've embedded risk management into the strategy from the beginning rather than bolting it on. For our Bitcoin treasury, we face price volatility, custody, and yield counterparty risk, managed through institutional-grade custody, disciplined position sizing, board approval limits, and counterparty controls. For the pre-IPO portfolio, the risks are execution, valuation, and liquidity, mitigated through investment committee approval, return thresholds, a long-dated horizon, and diversification over time. For Robots as a Service, we manage execution risk through top-tier advisory, a multi-OEM process, and bounded staged scale. For rare earths, commitment is phased and no capital is deployed until terms meet our standards. And for the currency and macro risk, we use contingent buffers and CFO-led hedging where appropriate. The governance framework sits around all of it. A new crypto-capable auditor, an enhanced JSOX framework, a cross-border board, and a quarterly IR commitment. Because here is the point, we are not asking shareholders to simply trust our ambition. We are showing you the controls around that ambition. And on that last item, I want to return to the commitment I made at the start. You told us our communication fell short, and you were right. You will hear from us regularly, not only once a year. Let me close where I began. Bitcoin Japan is building a listed platform for strategic exposure to AI, Bitcoin, and the infrastructure behind the next generation of technology, with every capital allocation decision measured by one yardstick: long-term intrinsic value per share. I know future capital raising is a sensitive subject, so let me be clear. We will not raise capital simply to accumulate cash. We will not raise capital for scale alone. We will raise capital only when we believe it can be deployed into clearly identified opportunities expected to create more value than the dilution required to fund them. That is the promise, that is the discipline, that is the framework. Our objective throughout is to grow long-term intrinsic value per share. The way we earn your confidence is not through words, but through disciplined execution and through speaking with you far more consistently than we have in the past. 2025 built the foundation, and 2026 is disciplined deployment. We ask for your support, and we take the next step together. Thank you for your continued trust in Bitcoin Japan Corporation.